All right, hey guys, Sam back with you here. Got some members interested in taking a look at Ripple, both to the dollar and to Bitcoin. So we'll try and squeeze in both here. So of course Ripple, in a lot of the crypto sphere news of late, as it's overtaken Ethereum for second highest in market cap. And it's just been on an incredible tear. So we're going to look at it. As you might suspect, it's been just remarkably technical. So as we sit here now, there's likely to be more opportunity here, but we're not quite there yet. So I'm going to break this down here so we can get a look at where we are and where the next opportunity might be there for us. So when you've had this kind of a move here, now I've got the 4 hour. Now this is Ripple to the dollar on Bitstamp, just happens to be where I'm trading it, but it will be very similar from exchange to exchange. So if you look here now, so we've had just this vertical move here so I've got the absolute low here to where we sit now. So this is a case where it can be advantageous to go to log scale, where you can get better separation, you can see it better. So let me open this up here now. So here you can see here's where we start, and we've had let me bring this in here so we can see it a little bit better. So we've had, from that starting point, we've had a very clean 5-wave sequence to give us our 1 wave of our very largest degree. And so I'm going to push these off so you get a sense of where we are in the count. Now from there, here's our second. Okay, so we get the A, B, and then we get this long and deep C into a 2 wave before we start this sequence that we're in now. So we start it with a diagonal, and that's very close here. Remember, the 4th can't overlap the 2, but if I blow that up, you'll see it's very close, but it doesn't overlap. It's very close, but doesn't overlap it. So we hold for a diagonal, right? So we don't violate any Elliott rule set. So if I pull back out here, we get a 1, 2. All right, now we got to open this up. So I'm going to go down to the 1 hour, where we can see it a little bit better. Now I've got to rescale again. Okay, so here's where we sit now. So here's that 1, 2. Here's the one that we just outlined, right, where we had the leading diagonal, only found in a 1 wave or an A wave. So you can see that we had the diagonal. We get our A, B, C down into a 2, and then here's the 4th. Here's the C wave up to the B. So we have 1, 2, then we start up into our 3rd. So if I go back over here and you get some sense of where we were, when we're at 20 cents here, this move to 88 cents was just, again, percentage wise, it's just enormous, just a remarkable move. And it's just vertical, it's just straight up. So when you're experiencing that, if you're long from any of these retracements, at this point it's very tempting to want to take some profit there. And as I will often tell people, there's nothing wrong with taking at least a partial profit. If you've got a runner like that, where Elliott wave can be advantageous to you is that we can look at this and we can understand where we are in the count. So given that we've had very technical trading, we've had a nice subdivision. You can see the subdivision here that gave us our 5th to complete the 1 wave. Then we get our 2, and then we get a 1, and then again a 2, and then we go for a 3. So you get, my point being that you can project where you are in the count, and if the count is going to continue, what's likely to happen next. So we get, here's this pattern that we see over and over and over again, where we get, here's the top of our 3rd, and then we get this truncated C wave, right? It is characterizing crypto. We saw it all throughout 2017, and yet here we see it again in 2018, and there's no change. So it's this triangular pattern where we get the A wave, we get the choppy 3 wave into a B, and then down we go into the C, but the C does not go below the low of the A. So we get a truncated C wave here, puts us into a triangle pattern, very commonly found in a 4th wave. So out of that comes we get our 5-wave sequence into a 1 wave. Down we come for the 2. We're right back to the Vegas wave. So this is our next launch point. So it gets a little tricky here. So we get a beautiful 5-wave sequence up here that completes our 1 wave of the largest degree. So Now, you can see, so where we know we've got a 3-4, and we're anticipating we complete with a 5th. But, you know, that this is, again, where the Elliott is advantageous to us, because we can surmise there that all we've done is complete a 5-wave sequence. So given that, now I've got to scrunch back up again. Now, given that we can assume that, okay, there's a completed 5-wave. So we're anticipating a second. Right, so in the largest degree, in the degree here in white, you can see we complete, even though we get a very, very tight, compact 4th, we go up, we get perfect subdivision to complete a 5th. So we have a completed 5-wave series. Now, remember, this is in log scale, so it's going to look a little bit different if you try and match this and don't put it in log scale. So I'm going to go from, well, let's see, I got to go back even further. So given, I got to go all the way, so I might have to go to a 2-hour to get it all to squeeze in. Okay, so I've completed, come on, Trading View, there we go. Okay, so I've completed now my 1 wave here of this degree here. So I've got, where's my 1? Hang on a second, let me pull it back. So we start here. Okay, so here's my 1. Now I'm going to pull from my low here, anticipating that I'm going to get a 2 wave. So I've got to scrunch it. You know, it's hard when it's gone this far. So I'm going to, here's my fib tool. So I've already wicked it off. So I'm going to pull up to that high. Right, so there's where this 5 wave starts. Right, this is the beginning of it. Here's the 1 wave. Here's the start. I've wicked it in yellow. The start of the 1 wave down to our 2, 3, 4. We complete a 5-wave sequence, giving a completed 1 wave of the larger degree. Now, again, I'm in log scale, so this compresses. It compresses the data. So from here, so from the start of that series, I go up to the pivot high. I come down, and here we go right to the 50%. Exactly where you'd expect. That's the highest probability for a second wave is between the 50 and the 618. We go, not only do we go right just past the 50, we go right into the pocket of the Vegas wave. You know, it doesn't get any better than that. You can't. That's absolutely perfect, which is why you want to keep a Vegas wave on. So you get confluence here, which I often talk about. So we've got a confluence event here. We have completed pattern. We are now in the fib range where we would anticipate the second wave between the 50 and the 618. And then to add a little sweetener to it, we are literally right between, in the pocket of the Vegas wave for a second. So we are absolutely textbook at this launch point. And then look at the reaction. Up we go for the first. So likely algo buying simply because it's a 50. So they're pulling from that low to the high to the 50 into the Vegas wave, and then we get a steep reaction out of that, which is adds confidence that we've now got algos buying at the 50. So from there, then we go up 1. Now, okay, so from our 2, we're expecting now 5-wave subdivision to complete our 3rd. Now from this 2, so let me open it up again so you can see this. It's gone so far, it's hard to do it. Okay, so I'm going to take that off so we can see it. Okay, we know we've got a 2 here. We're absolutely textbook. We've completed the 1, we've got our 2 in. Now we go into the second of the 3rd. All right, do you follow that? So there's the 1 wave. Where do we come? 1 tick from the 618. Again, remember that, as I just showed you, the highest probability for a second wave is between the 50 and the 618. We come right here. It's just perfect. It's just 1 tick above the 618. Again, technical precision. So yet again, more algo buying here. So they're going to defend right up to the 65. So from this pivot here, then we get the next move down. That gives us a 1-2. Now, money-making wave, the 3rd of the 3rd. Okay, so in the larger degree in blue, here's the 1-2. Now we're expecting subdivision to get a 3rd, in the 3rd in blue here, and we're expecting that to subdivide into an impulsive wave, because if it's a 3rd, it can't be a diagonal, so it has to be impulsive. The advantage being we know if it disqualifies. So if the 4th were to overlap the 1 and creating a diagonal, then the count is not right. We have to reevaluate. But since we don't see that, we get a clean 1 A, B, C into a 2. Just there's the, I've drawn the pitchfork on it from the start here of my 2, where my pivot begins. So I go up, and then I get this straight down. We come, and then here's the lower parallel. Lower parallel. Okay, so we've got just a perfect count here. So if you didn't buy it here, and because you're going too fast, too sharp, I'm scared of it. Up we go for the 1. Now we come back. Now here's your next add point. It's just a laydown. It's just right where you want to see it. A few ticks in front of the 618. So right at the lower parallel. So again, confluence. We've got pattern. We've got a fib pull relationship here. We've got structure. We've got the lower parallel of the median line. So in we go at the 2. What are we expecting now? We're anticipating subdivision. If this is my 2, then I'm going to start projecting for pivots for my 3rd. So I'm going to take the length of the 1. I'm going to project it from the 2. Highest probability zone here for the 3rd is the 1618 to 175 window. This is so strong it goes even further. We go to the 2618 300% window and actually even get a little bit through that. So we've got just a raging bull market here. It just, again, this is why we trade crypto. So here's the 1, 2 up for the big. Clearly, we've got a 1, 2, 3 given the strength of this. So I can pull this off because I know I've got a 3 here. Now I start to correct. I get an A, B, C down into my 4. I'm anticipating a relationship between the length of my 3rd projected from the low of my 2, trying to identify the 4. So, wrong one. Hang on. There we go. Come here. Trading View is giving me trouble today. There we go. Okay, so there's the 2 up to the 3. What do we get? Right to the 50, right? Highest probability zone between the 38 and the 50. We get a little through the 50, but given the size of that move, that doesn't surprise me. We get the A, B, C correction into the 4. So where's the anticipation from here? We're looking for the algo target because we know, again, algos have been buyers here, buyers here, buyers here. Here's their target. We may hit it while I'm recording this. So there's that. That's their first target. We don't know necessarily that it stops there. Oh, come over here. We don't know that it stops there, but that's a reasonable spot. Now, we also have some median line play here. We don't quite make it there. We could make it a little bit higher. Here's a potential. I mean, there's no reason to anticipate that this stops until we see a pivot and we start a retracement like we got right here. I mean, this could just keep going, or we may have to redraw the median lines, working off of the 1, 2, and see where we start to fit. It could be that we need to go to a modifier. So if I go down to the shift and go up 50% in price. Right? So, well, no, that's not going to do it. That's too steep. Modified shift will be too steep as well. So we've got to stay with original. But I would do a little experimenting with this here. I might look at this from my 2 low to my 1 over. Now I might look at that. Sometimes it's a little bit of trying to solve the puzzle and find the relationship. Look at that. So there we get the upper parallel. So there's the 1, 2 into the upper parallel, down to the lower parallel in the 50. Now this starts to look interesting. Now we might get a little bit of a pop through the negative 23.6. Algos are going to get their target. Wouldn't surprise me if they front run a little bit. But then we've got the median line sitting right here. So this, again, would not surprise me either. We could blow right through the median line and go up to the upper parallel. This would be an extreme, the negative 100 off of this pull from 2 to 3 high down to the 4. So we'll see what kind of reaction we get here. My anticipation would be that we get to the median line. But all we're trying to do is identify the top of the 5th here, which would give us the top of the 3rd. Now, we can't, in a market this strong, it's a fool's game to try and pick the top. We'll just wait and let the market show it to us. So why does all of this matter? Because we know we've got good, clean pivots here. So the next trade opportunity is we're looking for the 4th to complete to get in for a ride up into the 5th, assuming the count holds. So in blue here, 1, 2, up we go for the 3. We get perfect subdivision. We get good structure. We've got all the fib relationships that we can anticipate. We can't ask for any better. Now we're waiting for a pivot up here. So if you're long, this would be a time to be perhaps trailing with a stop or looking to take some partial profit either at the negative 23 or tap of the median line. I'd wait and see what kind of reaction we get here. You can anticipate algos will take profit here. So we'll see what kind of reaction we get there. If and when we can identify a third, and we'll know it when we see a move off of it and then an attempt to go back up for the B, which is a failure to reach new highs. Back we come down for the C. So we'll be waiting. So now, how would we approach that? Let's just say, for the sake of discussion, that we get up here to the negative 618, right? An extreme algo target. If that becomes our pivot up here, then we're looking for a retracement of the entire 5-wave. We're pulling from the 2. Just as we pulled from the 2 to the 3 here to get our 4, the entry for the 4th. Now, and again, I'm hypothesizing, if we get a pivot up here, and we don't know where it's going to be, it could be right here at the median line. It could be we tap the median line and we get a reaction. That potentially gives us our 5th of our 3rd. Then we're looking for the relationship from the 2 here up to the 3rd, looking for the 4th. Where are we looking for the 4th? Between the 38 and the 50, highest probability zone. But we're looking for subdivision like we got here, A, B, C. We want to see that subdivision because this move has been so huge. We want to see that kind of action. We want to let it subdivide. So again, the mistake is always to buy the A wave, thinking that the correction is done. And then yet again, as we've seen here, over and over again, this truncated C wave. We watch for that. So ideally, maybe you get a push like this, come back to the 38. That would be ideal. So if you're not in, I don't know how you buy it there other than you're just gambling. But, look for the reaction, then we wait for the correction to give us the 4th. That's the next opportunity to get in. All right, how am I doing? Okay, that's 16 minutes. I'm going long here. Okay, but it's a little cleaner and easier to spot and explain when we go to Bitcoin. Okay, so that should make sense. So on your watch list, we wait for the reaction, then start putting alarms at the 23, 6, the 38, the 50, looking for the next opportunity to get long. Let's go over to Ripple to Bitcoin, again, per member's request. See if I can squeeze this into one video. I know I'm running long today. There's 17 minutes. Okay, this is, all right, guys, this is as good. If you've been following what I'm teaching, whether you're a member, whether you're following on YouTube, this literally I couldn't fake an entry this good. I mean, it almost looks like it's photoshopped. It's that good, as I was saying to some members this morning. It just simply doesn't get any better than that, right? So it's okay, again, so I'm in log scale here, and I'm working from this low here. We don't need to go back and retrace all of it since I'm running long here. But we can see we get a very clean 5-wave sequence into our 1. Down we go for the 2. From here, right, there's our corner pocket trade. That's the trade we love, where we get that 80% probability here, 80% probability that we make the median line, which we do. Don't need the oscillators here. So from here, we get the median line. So from our 1, 2, boom to the median line, there's our 1 wave. So remember, now we're in on the larger degree here in green. We're anticipating, if we've got a 1, 2, we're anticipating subdivision to give us a 5-wave impulsive structure to give us a 3rd. Well, it just lays out as beautifully as it could possibly be. So I wick off the 1 here. From this low, up we go. Here's our 1. We get our A, our B, and our C. Yet again, the truncated C wave here doesn't go as low as the A wave. We give us our 2. Right at the Vegas wave. Take note of that. Right at the Vegas wave again, and then we get the rip up. So up we go. So if you didn't buy it here, well, if you were really patient because you were just uncomfortable given the extreme move here, you had 2 chances to buy it here. So we get here's the A wave. We get the rip down. Here's the A wave. Here's the B wave. Then we kind of go sideways. We get an odd-shaped C wave. But look where it goes, right? So if I blow this up a little bit so you can see it. So here's the A wave. B, down we go to the C. We literally go a tick. You can see, so this is a trade that we're in. This is, and you can see why we're in it, right? So this is, it's not that complicated. So what's the highest probability zone for the fourth between the 38 and the 50? Where are the algos buyers? We know they're buyers at the 50. So the entry sits a couple of ticks for a front run because algos will always front run it. Will front run ahead of the 50. So you can see the alarm goes off, puts us, alerts us, puts us in the market. Entry at the 50, stop under the 6.5. I've shown this setup. This is the trade. You want to trade crypto, you could do nothing other than wait for that. You're going to be very successful. So not only do we get a tick or two from the 50, we go into the pocket of the Vegas wave. I don't know what to tell you other than that's a trade you simply have to take. You just have to take that. I don't. If you see it 10 times a day, or 10 times a week, or 10 times a year, you wait for it. Depending on what time frame you're trading, you've got to take that trade. If you're not taking that trade, I can't help you. That it just doesn't get any better than that. We've also got the structure here of the lower parallel. That's as perfect an entry as you will ever see. There you go. So there it sits. Now, given that we know where we are in the count, we know where we are in the structure, we know where we are in the pattern. Here's our algo pull. Here's our algo target. So first target right there. And again, because we can qualify and quantify where we are, we can anticipate what's likely to happen next. So we know algos are going to want this, and we've got the upper parallel here to give us a target. So we've got a clean, clear target here for a fifth. Now, doesn't mean it has to stop there, but I would anticipate a reaction there. So for us, this is a clean entry here. We get 4.3 to 1. So this becomes a trader's choice. Do you bank the profit there, assuming we get there? And we don't know for sure that we're going to get there. But should we get there, that's 4.3 to 1 on your money. Stops already moved to break even. There's no reason to maintain any risk. So whether you're just below the pivot, I go to break even. Why hold the risk? So stops at break even. So you're in a risk-free trade. The only question is, how much profit are you going to see in it? So now, do you take the full piece off here? Do you get a push through this? Well, I'm inclined to bank profit there. I might let 30% of it run just in case we get a push through it because the market's so strong. But what we're anticipating now is that at some point up here, we're going to pivot into a 3 high, but given the very clean subdivision that we've seen here. 1, 2, 3, here's our 4, up we go for the 5. So we're anticipating the fourth. So if you're not long now, here's your next opportunity. If and when, should we top there, and we don't, again, it's a wait and see where we top, then the next trade setup is, now look, note here, if we complete the 5-wave sequence, let's just for the sake of discussion, say we complete up here for the hypothetical. Well, then we're pulling from this 2. Do you see that? We're pulling from that 2. Not this 2, pardon me, not this 2. That was for the trade here. Now we're pulling from this 2 because we've completed the 3. If and when we get a pivot up here, we complete the 3. Now we pull from the higher degree second down here, looking for the 4th. We know the 4th, just as we saw it here, between the 38 and the 50. And then we've got this nice structure here, and then here's our Vegas wave, just going right along with the trade, going right along with it. There's your next opportunity. So do you bank the whole thing and risk giving that much back, or do you bank all of it and anticipate that you're going to get a 3-wave structure into the 4th? That's trader's choice. Trader's choice. Here's your next target. Should we come down here and we get an entry in here, well, then here's the next target. That's the algo target. There'll be buyers at the 50. If it gets there, there's their target. So do you see how we target here? So from the upper parallel, lower parallel, either here or here for the upper parallel, and we've got targets up above. Now, if we complete that, let's say we complete up here, then we look for a retracement of the entire thing because all we've got is a completed 5-wave subdivision with perfect subdivision. So from my 0 to my 5, and again, we don't know where that 5 comes in, could be over here. When that completes, then we draw a retracement for the entire thing. If it's up here, if we take it up here, then we pull from the absolute low, looking for the 2-wave, which we know highest probability between the 50 and the 618. That's your next long-term buy. Just a potential roadmap doesn't mean that's That's what has to happen. But again, this is the advantage of Elliott. It gives you a potential roadmap, and when it's following it this perfectly, you in effect have an unfair advantage over anyone who doesn't know how to do this technical work. All right, guys, that's 24 minutes. I should wrap it there. All right, back to you later.